All right, welcome to OK Computer. I'm Dan Nathan. I'm joined by the illustrious Deirdre Bosa. That would be Debo. She is the host of CNBC's Tech Check. Debo, welcome back to OK Computer. I know you've been away a little bit. You've been up in the mountains in the Great White North.
I came back just at the right time. You know, the most exciting times that I have been a reporter in San Francisco is when the IPO window opens back up. So I'm cautiously optimistic that may happen.
Well, it's funny. It's been a really long drought, obviously. You know, we have a NASDAQ that's rip-roaring. You were reporting last night on CNBC, it felt like all day yesterday, about the ARM holdings, and this is Softbank spinning this thing back out. They took it private, in 2016. It was valued in 2019 at levels much, much higher than where they expect this thing to come. So there was a filing that suggests that this deal is going to come soon or so. And I did say it to you on Fast Money last night. I said, you're about to get a whole heck of a lot more busy, especially if this goes well, right? And we'll talk a little bit about some of the other companies that might come public. But if you talk about windows opening up, I would say with the NASDAQ where it is, especially relative to where it was at this time in 2022, this makes a whole heck of a lot of sense right now.
It does. And let me tell you why I like IPOs so much. As a tech reporter in San Francisco, I have access to a lot of these companies and I follow them when they're private. But public market investors, they don't have a lot of touch points, right? They're not investable until they go through that IPO. So a lot of it too is we don't have access to the financial information. We know that, well, ARM is a particular case, a specific case, because it was actually once public, but we don't know what the heck it's done over the last 8 or so years. So coming back to public markets, what has changed now versus 2016 when Softbank took the thing private? I think that's a really exciting moment for investors, but it's also getting trickier and trickier because the amount of money in the private markets means that these companies can stay private for a lot longer. So are you getting them? Is the public getting them when its best growth days are behind them? Are they getting them at the peak, in other words? Or is this a really unique opportunity to hold what could be a mega cap or a really important chip company in the future?
Yeah, no doubt. And you kind of laid it out really succinctly last night on CNBC. I mean, here's a company that they are not in the business of manufacturing semiconductors, right? They license these chip designs. It's a very high gross margin business. Okay, so that's something that I think probably attracted, Softbank back in the day and probably gave them a lot of confidence about their ability to basically bring this thing back out at once they retool it a little bit in the private market at a higher multiple than, let's say, many semiconductor peers or so. But, the end market, this is the one thing that really caught my attention when you think about what percentage of their sales come from smartphones. And we know how bad the smartphone market is right now. We saw that guidance out of Qualcomm, just a couple weeks ago and how poorly that stock is traded. I mean, that's one of the things I have to assume, and I think you hinted to it, they're going to have to tell a slightly different story away from smartphones to get the public really interested in this thing.
I mean, right now, and let me say first that Masa-san, he is the CEO and founder of SoftBank. He's had this really storied narrative as an investor, invested in Alibaba back at the dot-com bubble. Everything else went bust except for his $20 million investment in Alibaba, which would turn into over $100 billion. This has made him a legend and really given him the ability to go out and raise as much money as he has. But when we're talking ARM specifically, I mean, Masa-san is the king of the pivot. When he acquired this company back in 2016, he was talking about IoT, Internet of Things. He said ARM is going to be a humongous company because it plays into this trend. Guess what? It wasn't actually that big of a trend. So now what's the biggest trend? Starts with an A, ends with an I.
Yeah, exactly.
So now he's saying that ARM is going to be an AI company. And again, I mean, if you think about just a few years ago, he was talking about something completely else. He is going to have to make the case. And after looking at that F1 filing, which gave us all the information about the financials, about the business model, it's going to be difficult to make.
Yeah, well, it's interesting, that what you say about Masa-san is really interesting. Jensen Huang, the CEO of Nvidia, is also a really good storyteller, and he's also a good pivot, or pivoter, if you will. And you think about just the narratives, and you and I have talked about this on the pod. I mean, over the last 5 or 6 years, they were at the forefront of crypto mining. They were at the forefront of gaming, AR, VR, data center. I mean, the list goes on and on and on. And here they are now, and they are a trillion plus market cap company because they are really have the only supply of just these high-end graphics chips that are using to train these AI, generative AI models and large language models and the like here. And just so you know, we have a great conversation with Dylan Patel. He is the chief analyst at SemiAnalysis. We spend a lot of time talking about his estimates, what he's seen in the supply chain, what he sees from a competitive standpoint, what he also sees as like kind of the forward guidance going forward, the direction of it into Nvidia's quarter. That's Wednesday after the close. And, you better get your popcorn out for that one, Debo, because that's going to be, there's probably going to be some fireworks there. Just curious, do you think based on people that you're speaking to already about this filing as it relates to ARM, are they going to be able to kind of pivot? Are they going to be able to tell that story? Because right now, if you're exposed to PCs and smartphones and you're in the semiconductor space, it is not a great place to be right now.
Not good. No, and Bernstein did an analysis. They didn't have the F1, so that's a big disclaimer. They didn't have those cold hard numbers, but we kind of know what ARM has been doing. And they estimated its valuation around $40 billion. Masa-san wants to take this thing public for somewhere between 60 to 70 billion. Fingers crossed, it's going to be more than that. He never thinks small. So for him, I still remember the Uber days when Uber was going to be valued north of $120 billion. I mean, it's interesting because he's really deploying the same playbook he deployed for some, kind of the not so good IPOs of 2019, Uber, WeWork, which didn't even make it to public markets, just pours a ton of cash into them, bids up the valuation and expects the market to sort of take that valuation as well. So he could be in for a bit of a rude awakening here. I don't know. I think a lot of the folks I talk to are skeptical that it will get that high because, again, as you said, Dan, this is the company that derives most of its revenue from declining end markets like the smartphone. It still has to prove itself in artificial intelligence. And I would say the difference between it and Nvidia had this blowout guidance that said it's going to be making money off of this shift this year. We don't have that yet from ARM. Maybe it will go on the roadshow and say that, but I think it's a harder case to make.
Yeah, well, the other thing that I think is interesting, I mean, when you think about the valuation of this thing, investors have been, very comfortable paying, 20 sometimes sales for Nvidia because they just guided their sales up 75% in the quarter that they just gave. So tomorrow night or Wednesday, after they report and they give their guidance, it'll be very interesting to see how investors react to what is already, huge expectations. All right. So people are already expecting them to blow out the quarter that they just had guided to in late May, and they're expected to blow out the guidance that they're going to give tomorrow for the current quarter. And if investors are not buying it at that point, right, at some point they start to price in, like, is this, this is a 60 some percent gross margin company. ARM, on the other hand, is a much higher gross margin company, but they have much less sales. So if you're telling me this is going to be a 50 or 60 billion dollar, this is where Masa wants this to come, you're talking about a multiple that it doesn't exist in the semiconductor in the public markets right now, right? So if Nvidia can't support it in the days to come, and I'm not making a prediction about that, then it's going to be really hard for ARM that doesn't have the sort of exposure in this end market right now, I think, to achieve that sort of valuation. Does that make sense to you?
Bingo. I think that you laid that out perfectly. Now, the X factor here, which I think is important, we've known and we've seen in the markets this year that hype can gloss over a lot of things.
Yeah.
You don't necessarily need to have an AI. You can have an AI strategy, but you don't actually need AI dollars for your stock to go up. So over the next few weeks, as ARM goes on its roadshow, they're going to be picking up, and I know they're already talking to anchor investors, right? If they get an Nvidia, an Amazon, an Intel, who knows what else, to come on and give them a vote of confidence, that could get retail investors and the broader investing community excited about this company, even though everything you just said about its comparison to Nvidia and the rest of the chip space is true. The hype cycle could be working overtime.
Yeah, no doubt. And here's another one. And it's funny because this seems almost like a year or two too late. So you've been reporting on Instacart. Okay. So they're eyeing a September IPO. And it's interesting to me because, this was one of those business models that obviously got pulled forward during the pandemic. And, a lot of their peers were doing well. This has been one of the things that really kept Uber afloat. If you think about it, this was definitely, I think, something that prior to the pandemic, a lot of investors were not so excited about the investments they're making in food delivery and the like. And it was something that really buoyed them throughout, and they gained a lot of market share, right? And so I think at the behest of, let's say, some of their smaller competitors here, they made some acquisitions, they bought Postmates and stuff. So what do you think this Instacart thing looks like? Because people, at least tech investors, are much less excited about markets like this that they think are getting a bit saturated. There's a lot of price competition. You know what I mean? The margins are going to get thinner and thinner here because AI is that shiny object right now. And I'm sure a lot of these delivery companies are going to talk about how they're using machine learning and AI and the like, but there's not going to be a real commercialized product in and around them. They might help these companies become more efficient, but they're not going to be something that is going to drop to the bottom line anytime soon. So I just wonder, is this one, it's not going to have the same excitement about an ARM, especially if ARM is able to tell a bit more of an AI story.
So it will be exciting in the sense that this is the first sort of larger scale venture backed IPO to go out. I'm so curious to see who are the major stakeholders. What has happened after this 20-month pause in the IPO market is the founder, Apoorva Mehta, who stepped down a few years ago, gave the job to Fiji Simo, Facebook executive. Does he retain control? Who does have control? What does this look like? But you're right, the investment proposition is so much less exciting than it was a few years ago. I remember covering Uber and Lyft so closely, and there was just no public comp. So you wondered, where is this thing going to price? And ultimately, it was pretty disappointing. And over the last few years, you said the word afloat. That's exactly the word. In the case of Uber, not even Lyft.
Yeah.
Lyft is drowning. Uber is afloat, but that's really nothing to be proud of because you've underperformed the NASDAQ, you've underperformed the broader markets, the S&P, and you're just muddling around your IPO price. I get called, like an Uber hater. It's not true. I just think that it's remarkable how much money this company has raised and lost over the years. Instacart could be different. I love that. I have not seen the finances, and we know very little actually about the finances. We've heard that it's profitable, potentially on a net income basis, but how profitable? I mean, even Uber in some cases has notched some quarters that are profitable, but it's nothing to write home about. So Instacart has this ad business before anyone else did in the gig economy, before Uber and DoorDash, which are now moving into that space because they realize, hey, this is high margin. We have sort of the scale to push these ads out. So that will be interesting. But on the other side, it's facing so much more competition. A few years ago, Instacart was the main game in town if you wanted your groceries delivered. But now everyone's doing it, from Uber and DoorDash to the huge, very well capitalized players like Walmart and Target. So the thesis around the company has been weakening a little bit, but I'm very curious. I think in my mind, there's kind of a few different classes of gig economy companies. You've got Uber and Lyft and DoorDash with pretty not great margins. Then you have an Airbnb, which sort of flips all the expectations on its head, just creates this incredible brand, gets to free cash flow, positive net income earnings, and just keeps kind of firing on all cylinders. So we'll see.
Yeah, no doubt. And you mentioned Lyft drowning. I know you've spent some time reporting with the new CEO, and ultimately, I would expect at some point a somewhat new direction. And you think about this: if Instacart is successful, might and again, I know you disagree with this, but I've mentioned this in the past. Lyft with that like tiny little enterprise value at $4 billion, might that be an interesting piece of a puzzle for one of these delivery companies, if you will, that want to better compete with Uber Eats and the like here? And again, buy versus build and the like here. But, I don't know. This one to me could seem kind of interesting, and it would have to come with a strategic who's willing to bear the brunt if they were going to say it's going to cost us a few billion or whatever it is to build out this sort of delivery capability and have our own sort of fleet, if you will, or at least the technology, to enable a fleet of delivery sort of things. I know, I see you.
But
Right.
Lyft has no fleet. Let's be clear here.
Yeah.
These are not employees. These are not employed drivers. These are
Yeah.
independent contractors contractors who go on their phone and switch between Uber and Lyft and Instacart, whatever is going to give them the better rate. So I don't know what you're buying.
It's a platform. I mean, I shouldn't have used the word fleet. It's a platform with a bunch of data and that sort of thing. So to me, I
I
totally get
understand where you're coming from.
yeah. No,
It's got to be worth something to someone, and I don't disagree with you there.
yeah. Hey, well, let's just lastly, because we're gonna Dylan and I spent a lot of time talking about Nvidia, but I just want to, I know this is a company that you know well, you've reported on for years. It is literally, it's taken over, if you think, just a lot of the excitement from a lot of these other big stories that have just eaten up so much of the space in the room over the last few years. When you think about Apple was this obsession a few years ago, and Tesla's been an obsession. I mean, Nvidia is 100% like the only thing that any tech investor, that's where they start and stop on. What do you think? Dan Niles, I know a friend of yours, he was on the pod last week from Saturi Fund, and Dan said at the time, I think the stock was trading near kind of 410. It was off its recent highs at like 460 or something like that. He said, listen, I'm going to be long it into the print. I will be long much less of it. And again, he reserves the right not to be involved in it at all at that point. He basically said that if it does have a run, I just don't know at that point if it runs into the print. But he said something really interesting to me is like, if those expectations, which are really high, if they are met and the stock doesn't rally after that, we could be in for a really difficult time. If you think about going back, and you and I've talked about this, to kind of July 18th, 19th, that period where Microsoft introduced the pricing of their Copilot tools and the like, that was the top for the AI trade other than Nvidia. And even Nvidia sold off pretty hard. But now in this morning, Tuesday, it made a new all-time high briefly, but it's come off a little bit. So I'm just curious, really from a sentiment standpoint, because I know you have your finger on the pulse out there. Is this as an important event as I think it is, and a lot of other investors think it is for this point of the rally of the NASDAQ?
It is. I think it's a hugely important point. And let me just give you sort of an anecdote. The markets are talking about Nvidia, right? And the really unique, almost monopoly it has in this AI boom right now. But even on the low, like the earliest levels of a business and a company, and a lot of them, of course, are being built right out here in San Francisco and Silicon Valley. I heard this term the other day that I'd never heard before. I don't know if you've heard of it, Dan. Solo capitalist.
No.
I think it's another term for like an angel investor, but Silicon Valley updates these things from time to time.
Yeah.
The world of investing here in private companies is so competitive. It still is competitive, even though we're going through sort of this VC fundraising winter, that there's investors out there just buying up Nvidia GPUs. And they go to a startup and they say, I got something better than dollars for you. I got Nvidia GPUs. And some founders and CEOs, the calculus they're making is to go with the solo capitalist to who's going to provide them with the compute power. So, I mean, to me, that's just wild, because you're saying that Nvidia GPUs are worth more than money. And, it's remarkable to me. So if it really is the only game in town for now, and even if you think that market share is going to go from 95% or whatever to 80%, if you think that Amazon and others are building their own AI chips, it's a remarkable place to be. And I bring it back to the markets last quarter, right? People were saying the same thing. How can you be buying Nvidia into this print? It's so expensive already. And then shocker, the day after it reported, its multiple went down because its revenue guidance was so huge. So I don't know. I understand the valuation issues, but again, it's like, I think I read a headline, is this the new Tesla? People underestimated that Tesla could go as far as it did. I don't know. Dan Niles was talking about a trade, which is harder to time if you're sort of an average investor, but in the long term, which is something that Jim Cramer has argued for a very long time and been right about. Nvidia, sort of on every spectrum that I look at, from the private markets to the public markets, is a very exciting name to many.
Yeah, and I'll just mention this. I mean, it was exciting in late 2021 when they seemed to be involved in almost every major theme, whether it was the metaverse and this, that, and the stock sold off 75% to its lows, early this year from those highs. So, it could happen again. I've been trading it. I've traded it well. periods very poorly right now. And I'll probably have a small defined risk short position into the print, because I'm probably of the camp that even if they were to give the sort of guidance that they gave last quarter for the current quarter, at some point, a lot of investors are going to expect that competition will come online. There will be pricing pressure on these things. There could be less demand also. And so to me, I also think the China double and triple ordering, I think these bans are going to get tightened up a little bit. These tech, bans out of Washington. And I think that at some point you're going to start discounting that a little bit. But again, that's what makes a market. All right, Debo, I
And
really
that's why I love talking to you, Dan, because you almost make me change my mind. I'll say
Well,
something and then you'll provide such a good counter to it. I'm like, maybe I'll change my mind on that.
Well, let's. I like your thought process too, and I think one of the most important things, and I say this about trading all the time, is like if you're going to take a directional view on something, you better understand how it could go wrong. And so, one of the reasons why I really enjoy this, and I hope our listeners enjoy it as much as I do, is you are so well sourced. You've been covering these spaces for so long here, and you're not thinking about it through a trader lens. You're thinking about it through someone who's trying to get to the bottom of what's going on and then layer in the sentiment. So Deirdre Bosa, I really appreciate you coming on OK Computer again. I hope to see you again next week.
As always, thank you, Dan.